Viciously. What do you mean no sound? It didn't even start yet. CPI is going to be higher because of a 50 base point cut. That's not how it works. It doesn't take shape that fast. Plus, remember that these CPI numbers are for September. So they just cut rates September 18th. There's no way that the Fed rate cuts would instantly make CPI higher in the same month that they cut, even though they cut in the third week of that month. That makes 0 sense. Yeah, I don't typically eat until after the trading day is over.
Welcome back to Swap Box. Rick Santella here live at CME HQ with the breaking news of the morning. Big news. CPI, the big inflation number for September, hitting the wires. Expected to see a headline up 0.1%, comes in up 0.2%. If you strip out food and energy, up 0.3%, which of course equals our last look. To find a bigger number, you have to go back to March when it was up 0.4. But do keep in mind, June was up 0.1, July was up 0.2. So this has been running a bit on the warm side. Now, if we look at year-over-year numbers, 2.4, hotter than expected, but 0.1 cooler than the rear view mirror, and it continues the streak of these numbers year over year on the non-core moving lower. And if you look at 2.4, just like 2.5, it comps back to February of 2021. Now, if we look at what's going on with respect to year over year core, which starts to get into some very important numbers here, this one's warm as well. 3.3. 0.1 warmer than expected, 0.1 warmer than the rear view mirror. It equals June, but of course the last 2 months have been 3.2. Now, finally, if we look at the indexes, and I think the indexes are very important, The index for the headline number, 315.301, another all-time high. If you look at the core, 320.76, another all-time high. Now, let's look at initial jobless claims. Some surprises here. 258,000. 258,000. That's going to put a little potential downward pressure on interest rates. The last time we had a number in that category, you're looking at June of 23, where it was 261,000. And finally, yes, it's the 18th consecutive month over 1.8 million on continuing claims. And just for the record, the last time we were above 1.9 million was November of 21. We come in today at 1,861,000. That would be the warmest going back to the third week in July. So to summarize, it certainly seems as though the inflation numbers pretty much across the board were either as expected on one count, but pretty much warmer on all counts. And initial jobless claims definitely had a little pop there. So before the number, we were hovering right around 404 in a 2-year. We have dropped rather dramatically. We're now briefly under 4%. But if you look at the longer dated side, it moved from about 408 to basically 406. So it moved down as well. What's notable about 10-year is that yesterday was the 6th consecutive session that the high yield was higher than the previous day's high yield, all consecutive. So we want to monitor today, and today it already happened. We have traded above yesterday's high yield. We have high yield today of 410. The high yield yesterday was a whisker under 408. That means 7 in a row. Why do I bring this up every day? If you're a technician, that's a real momentum builder to higher yields, lower prices. Becky, back to you.
And Rick, what about that auction sale you were pointing out yesterday? You made the interesting point that we'd see if traders are more concerned about locking in some of the gains maybe they've seen at this point, or maybe more concerned about that upward trend continuing.
Yes, I think what we are going to see is, and we do have an auction today, reopened 30s, 22 billion. But I think we learned a lot over the last couple of auctions. It certainly seems as though certain categories have gotten a bit excited. Yesterday, it was all about indirect bidders. For the 3-year, it was about direct bidders. These categories show me that there is a little bit of nervousness out there regarding the U.S. economy, how the Fed has anticipated how the rate cycle will go. And yes, I think there has been some profit taking, but I do think there's more of a reluctance to fade the notion that long duration rates like 10s, 20s, 30s, even 7s to some extent, are going to be a bit more excited. Many believe it's the political season, and that subset believes it's all about debt and deficits, and how neither candidate seems too worried about trying to overspend to get more votes. Back to you.
All right, Rick, thank you. Steve Leisman joins us right now with more on this. And Steve, I guess my question would be, is the Fed more focused on a hotter than expected inflation read or a higher than expected jobless claims number?
I think the answer is yes, Becky. I think they're going to follow all of this right now. And this is a disappointing report, but not incredibly disappointing. And I'll go through some of the numbers here that I think created the pop here. This pop in food prices up 0.4%. A pop in used cars were -1 in the prior, minus a full percentage point in the prior month. Now they're up 0.3. Apparel up a strong 1.1%. Shelter, though, helping out here. Hang on, I wrote down the OER, owner's equivalent rent, went from 0.5 to 0.3. That is one of the lower numbers that we've had, and might show that finally we're getting, that's the lowest number I have, at least in front of me here, going back to the last several months. And then you also had a motor vehicle insurance up 1.2 and airline fares up 3.2. I think, Becky, what we learned yesterday from the minutes is that there was a robust debate about doing 25 or doing 50. We heard yesterday Lori Logan, the Dallas Fed president, talk about still existing concerns about inflation being out there. We don't know how many Fed officials have this concern about it, but it may be as many as 6 or 7. It may be that Fed Chair Powell was out there twisting arms to get 50. There was certainly a number who wanted to do 25. And this down the road says, okay, maybe there's fewer cuts to come, especially if we're going to run sort of these high inflation rates. The good news, you had a decline in energy prices down 1.9%. You also had, finally, it looks like, some decline in housing inflation out there. The bad news is there's still some inflation out there worth watching. And then you also have to watch, as you said, the jobless claim. So the Fed sees it as balanced. I think there's still more cuts to come because of the idea that the Fed thinks you want to reduce rates to be in line with the prior decline and the strong decline in inflation while still maintaining a restrictive standpoint. So this has an impact, I think, down the road with how far the Fed goes.
Okay, Steve, thank you.
Coming up when we return, a unique view on the AI race from two longtime tech industry insiders, Sierra's co-founders, Brett Taylor and Clay Barbeau, going to be joining us. Brett is also,
All right, so you guys heard it there. Inflation came in surprisingly higher. The reason that I think it's surprising is because, you know, there is a certain extent of thought that these numbers are cooked, right? Because they can always revise them, later. And certainly the last inflation that came in at 2.5%, which was, I think, the first inflation report to come in at 2.5% or lower, seemed, you know, a little bit miraculous, to be honest. So this inflation was expected at 2.3% year over year, and it came in at 2.4. So, you know, I would have expected either that especially before elections, I would have expected that the expectation would be more modest at like 2.4, or maybe say that inflation's coming in at 2.5 again, or that somehow the numbers would be a little bit fudged. But it did come in hotter than expected, right? So busting that perpetual conspiracy theory. Now, the numbers still, the way they're calculated, are not like they used to be calculated, but that's not even what we're concerned with here, because we're just talking about the markets. But let's see here. Let me just go over the numbers again. So 2.4% versus 2.3%, right, year over year. But more importantly, a couple of things is month over month, core came in at 0.3% versus 0.2%. And that is a big deal when core comes in higher than expected, because that strips out food and energy. And then month over month, it came in at 0.2% versus 0.1%. That's headline. But moreover, jobless claims came in much higher than expected. I don't know if it's in this report here. But jobless claims came in 250 something thousand. Either way, it came in much more than expected. I don't have the numbers here. But it came in much higher than expected. So now we have, this is what I was talking about in my last video, guys. Now we have the narrative that, you know, unemployment, even though it's not the unemployment number, but it's a jobs number, that jobless numbers could be coming in higher than expected, and inflation could be coming in higher than expected, right? So the Fed, obviously, to combat unemployment, has to cut rates, but in order to combat inflation, they can't cut rates. This is where the game of chicken starts, and why it's so hard to engineer a soft landing, right? I know a lot of you that maybe haven't been tracking the markets for that long don't really understand why it's so hard to get a soft landing. And it's because of this, right? You have two mandates. You have the jobs and you have inflation. And the measures to combat the unemployment, right, are not the same measures used to combat inflation, because the measures to combat unemployment are easing, right? A decline in rates, quantitative easing. And the measures to combat inflation are tightening, right? Raising rates or keeping rates where they are, and quantitative tightening. So that's why it's almost impossible to engineer a soft landing, right? is this in general bearish for the market? Yes, but please don't, be the annoying person that today, when the market is doing this, every single move, you're going to bob your head with the candle saying, why is it going up? Why is it going down? Why is it going up? The effects of this, right, will take shape for the weeks to come until the next data set and until the next FOMC. But in general, yes, obviously, the market and the economy don't want to see higher inflation potentially and higher jobless numbers, obviously. Where did you get the hoodie vest? I don't know. So the market opens in 48 minutes. And right now, you could see that at 8:30, we had the manipulative move. And then so far, the pre-market move is the real move, is down. From a high time frame perspective, this line right here represents the all-time high from September 26, and we popped above it yesterday. Now, I'm going to give you something interesting that you might not hear elsewhere. October 9th, 2007, the market hit an all-time high, right? The market did not see another all-time high until 2013. How freaking crazy is that? When I saw that, I had to double look. I couldn't believe that October 2007, the market hit an all-time high and didn't come back to that high until 6 years later. That's crazy. So imagine the price moves down and it does, or we don't hit this level again until 2030. That's insane. And what's crazy is very, very similar. October 9th, we hit an all-time high. And the following CPI report, a couple days later, CPI came in higher than expected, just like today. The Fed needs to print more money. Yes, the only problem with that is we're trying to combat inflation. This Devils guy is annoying as shit. The Fed needs to drill more oil. Imagine having such a view that the Fed is the one who drills oil. I think before market open, we could potentially get a counter move. This was yesterday's PM low. What? Whoa, my God! Look at this! Look at this fucking wick on gold. Holy shit! Taking out stops on both sides. Holy shit! What is the dollar doing? I wouldn't be surprised if it's just sitting there. Minus 0.02%. Yeah, dollar, gold, and rates, that even though they had big wicks, obviously, are kind of waiting to normalize for the bigger move. Now, obviously, the move that happens today doesn't mean that is the finale, the final move. I wonder if there's a long here before market open. Let me see something real quick. These equal lows are not confidence inducing. $11 higher high. Interesting. There might be a long here. I would like to see these lows get taken out first on ES. Let me see. That's a 4-hour gap. Yeah, I want to see these lows here taken out on ES if possible. But I think there might be a short long at play here. When I say short long, I mean, not a broad, but just to get back to a swing high. Yeah, I'm gonna wait until ES potentially takes these out. Gold took out these equal highs here from Tuesday and Wednesday. And it touched that 4-hour fair value gap. I think there might be. I would have liked to see it take more of this, but I think there might be a short here. Let's see. Let's see if this 5-minute here fails. If not, then it's going to go 5-minute back up for more of that 4-hour fair value gap. You think news gets bought? I mean, very nice move on gold here. I'm still monitoring this 5-minute fair value gap here. If we close below this, then I think there's a potential short on gold. Otherwise, it's going to go back up for more of that 4-hour fair value gap. Do I think this gets bought up here? To a certain extent, yes. But not, I'm not confident in the market sustaining bullishness for the whole day yet. So we now have a breaker right there in that fair value gap. After closing above this inversion gap. I'm going to leave gold alone for a second here until it normalizes. I don't like the way that it's forming. But ideally, I would like to see a counter move long here. Yeah, I don't see anything A plus so far. $20 until this 5-minute candle closes. On the 3-minute, we close below and reject it off of it. And there might be a move down to 8:30. Let's see. Mm-hmm. When gold moves, it can move down quick. But I want to see if we can get down to to 8:30, which is 2632.1. There's a bullish unicorn here on the 15-minute that would stop that from happening. It would need real downward momentum. It would need a spike in the dollar in order for that to happen. I hope we get a flush down, man. Like a flush down to 830. The only thing is that on the 15-minute, this right here is going to railroad us a bit because we have that and then we have this breaker. And the dollar is obviously not cooperating right now, even though yields are slightly up. But this looks like if we fail this 15-minute gap, then I think we get to data lows down here. really don't want to book this, but we hit that breaker. We hit CE of that fair value gap. Like on the low time frame, it looks like extremely bearish momentum. We did take out major buy side, but we do have a lot of buy side inefficiencies up here. Honestly, this can go either way. Meaning I was comfortable shorting it after that bearish momentum up here. But in terms of the extent of the move, I think that there's a lot of potentials that can happen here. It's not that clear. Especially because this right here is a data wick. So best case scenario is that we get a follow through to data lows. A very likely scenario is that we get a bounce off here and take more of that 4-hour fair value gap because we didn't even hit CE of that. Market opens in 5 minutes, which on CPI day, we might see a lot of fuckery. If you have any positions open, make sure you got your stops in place. Where's Tesla at? It's about $1 up pre-market. Yeah, and the thing on gold is it looks like right here, right, we had this daily fair value gap. So we came down into it and are now bouncing into this daily fair value gap. One thing's for sure, that with gold, if you're on the right side of the move and it just flushes one of these imbalances, then it's going to go crazy. Meaning that what you would expect it to do here is, you know, come up here, touch the fair value gap, down into the unicorn, back up to get more buy side, right? But if it just flushes this, that thing is going to go south. NQ and ES definitely stagnant. There is bullish divergence here on the short term, on the short time frame, where NQ made a lower low and ES made a higher low. Obviously, not extremely remarkable here. You want to see SMT in a major liquidity zone, but after closing above that 3-minute fair value gap, we are now just hovering in it, and it's waiting for market open. We do have these equal lows on ES that can potentially get taken. But let's see. What time is the CPI report? Go back to sleep. Okay, the dollar, if the dollar heats up here, let's see. Still in a very precarious state. Market just opened, guys. What is all this shit? I don't have too many goddamn rectangles here. If gold fails this, guys, we're going to Shitsville. The position is now up 510. But I really want to see it fail that. Oh, wow. It moved so fast, it didn't have time to update the P&L. Tapped 830. But completely shit on this breaker here for sure. So we know the breaker is weak, but we still have 830 and the 15-minute fair value gap. And the dollar's heating up. I want to see a low resistance liquidity run here, meaning I don't want to see price come back up here. I don't want to see that. Whoops, what the fuck did I just do? Okay, notes, bro. No one cares. Leave if you want. You can carry on about fucking YouTube ads, bro. Either trade or don't. Nobody cares. Let me look at what happened to what's happening with bonds. Yeah, yields are heating up, which means that we're likely going to. Yeah, we saw a gap down on TLT. Not as bad as I thought, but as I was saying in on my tweet, that if CPI comes in higher than expected, that's going to be terrible for bonds because yields are going to go up, which means bond funds are going to go down. 2638.8. All right, let's see. ES, did it take out those lows that I was pointing out earlier? These lows? Yeah, I think we're on the verge of taking that out. So gold jumped off of 830 and the 15-minute fair value gap. All right, let's see if it gets rejected off this 5-minute. If it closes above this 5-minute, then I'll consider taking my position off and looking for another one. If it gets rejected off this 5-minute, it's going to keep going lower. When does that 5-minute end? 3 minutes and 50 seconds. Okay. ES and NQ just really just barcoding here. I think ES has to take out those equal lows. So CL spiked up. Okay. CL spiked up after data. Yeah, whoever in the chat said they shorted CL. That's a nice short, man. That's a very, very, very nice short. I think you can get to midnight at least. Wow, gold rejecting on that 5 minute like crazy. So there are some signs of weakness in the short term on gold. The fact that this breaker wasn't upheld, even though the fair value gap was, but you had the fair value gap, the 15-minute fair value gap in 830. Those are very strong levels. So to fail that many arrays would be hard to do in a low resistance capacity. But we did fail the breaker. And unless a miracle happens in the next 35 seconds, we're going to fail that 5-minute gap. And we rejected off of equilibrium of this move. So I think gold has a chance, if the dollar keeps going up, gold has a chance to keep dumping this. Still up on this position. I haven't even closed it. And I want to see if we can ride it to data lows, which is a little too much to ask, but midnight would be sweet. We did tap 830, would like to go below to midnight. But we need to fail. Here, let me show you. We need to fail that. And if we fail this and close, then we're going south. If not, there is a possibility to go north because we haven't yet mitigated this. So I'm gonna stay in the trade to try to squeeze the most out of it. But the next play on gold I'll take if my trade doesn't end up giving me the full profit that I want. I hear you. Actually, you know what? I'm gonna set an alert here. Is if gold hits that, then I'll likely look for another trade. Oh, there's an RTH gap here too. Wait a minute. So RTH gap. Okay, so midnight would be, I see. That makes sense. Okay, I stopped at a break even on the gold trade. I'm not going to re-enter here until we either take that up here. Yeah, I don't want to re-enter this. Could there be a re-entry? Sure. I mean, we did hit OTE. Obviously, I was up 600 per contract. Could have booked it. Didn't want to. My choice. Because I wanted to see if we can get a. For me, it was more. It was either going to go to break even, or I wanted to see if we can squeeze way more out of it. And now the next time I'll revisit gold is when it gets up there. Guys, if you're on that stream, hit that thumbs up so that other people find the stream. And so that I can find a winning trade for y'all. Even though I'm sure a lot of you scalped gold. All right, we're in a macro right now. Yes, I was in a gold trade. Ovidiu Mihai. Kenan says, I don't want more people from YouTube. Yeah, I don't disagree. This kid is named is Little AR-15. Even with bad news, markets can't go down. Am I missing something? Yeah, you're probably missing a first grade lesson in the difference between green and red. and the fact that every single market is red. What do you think CPI unemployment will mean for TMF? I already told you. CPI better not come in higher than expected, or yields are going to surge and bonds are going to tank. This fool said missing some brain cells. Yeah, little AR-15, bro. This is not a video game. I already told you what I'm anticipating on gold, Johnny. I already told you exactly what I'm anticipating on gold. My answer has not changed from a minute and a half ago. We PO3'd into below data lows into that 4-hour fair value gap. I want to see if there's a potential long on the indices, but would be ridden back to data highs. Yeah, I don't know if we have the juice to go up, or if ES wants more downside. Because what I would like to happen is to manipulate up to take out the data highs at some point, which can happen today or tomorrow, by the way. And we are in a high time frame imbalance after we took out that 4-hour fair value gap down here. I just don't know the. Let's see. Okay, gold is getting more buy side up here. Like I said, I have my alert set at that. And I'll look at another gold trade. Let's see if we can get some expansion out of this macro here. Come on, bro. I want at least 2-1 on this. That's my trade right there. I want to take it to at least 830 would be ideal. But what would be really ideal is if we take it all the way up to data highs, which is a lot less likely. May just be a scalping day, bro. May just be a scalping day. I don't want to break even on this bitch. Hey. Okay, it's retesting the IFVG right there. Do you think it's wise to put 10% of my portfolio in TLT? I think it's wise for you to consult with the money manager. This took out yesterday's PM low. Can we just please? We have a macro. The macro is going to expire soon. Yeah, I don't know that we get an expansion right now. Is gold back on the table? Oh, nice. I might have to book this soon. Keep going. All right. That's probably as good as it's going to do here. Keep going. Oh, man, if it can hit those. We're now filling that 15-minute gap. This is so precarious, bro. I already took a break even on fucking gold. I don't want to do it on this. Especially in this 15-minute fair value gap. I might have to book it here, guys. Yeah. Yeah, I'm taking that. I'll take that win. Took it in some accounts. Took it with micros as well because the stop limit was too big for some of the accounts. But I'll book that for the day and probably not. I don't know. If I find an A+ trade, maybe on gold, I'll touch these accounts again. Otherwise, might just stick to my cash account. How many of you took this here? How many of you took this long? Wow, not a lot of people took it. And there's 1,000 people watching the stream. All right. Why is it doing that, bro? Still waiting on gold here. Guys, hit that thumbs up. Today's sketch, high unemployment, USD isn't moving much. We didn't get unemployment today. When trading PA, when do you take profits? Whenever I want. What do you mean? When I want to spend the money or invest in something? All right, guys. If this doesn't get 500 likes, I'm leaving the stream. I'll just go to Discord. Hit that thumbs up, man. Not only are you guys getting trade ideas, but you're getting better education than they give you in finance school. You know why? Because I went to finance school. They didn't teach me shit. Dr. Pisspot, better yet, I'll do you one better, bro. I'll just kick you off the stream. There. Now you can go trade with your mom in the basement. See if she makes you money. Yeah. So what I was saying on Twitter was that CPI better not come in higher than expected for bonds specifically, because that means that the Fed cannot cut rates. Actually, you know what? What does the FOMC watch tool right now say? Still projecting one cut. As opposed to no cuts. You know, and the market will probably try to 27 more likes, and I'll stay on for you guys. But the market will probably try to justify this as, okay, we came in at 2.4%, and last month was 2.5%. So yes, it's higher than the expected 2.3, but guess what? Inflation is trending down, guys. That's how they're going to try to justify it. And the Fed will still cut rates, but they're going to cut 25 basis points. There's no way in hell they're doing 50. All right, we just need gold to get up here, guys. And I think there will be an A+ trade. Oil is looking interesting. So far was the right call to take profits on NQ. Although there might be a continuation here. Let's see. Three, 6, 9. Do I like this trade? Let's see. Let's see. Do I like this trade? Definitely not A+. The only thing going, the few things going for us here, we have equal highs. We did sweep sell side. We have potential data highs. The things going against us. Bearish unicorn. 15-minute fair value gap. Yeah, not an A+ trade. Gonna hold out on this one. Yeah, oil looks super interesting here. Hmm. What? Why would I join your trading program when you just ignore the questions? Dude, there's thousands of people here. I'm trying to find you a trade. What the fuck is wrong with you? In the Discord, I'm active all day, dude. I'm going live on YouTube because this is major news. What an entitled bitch. You know what? Yeah. You wouldn't fit anyway in the Discord, so don't join. I don't want you to join the trading program. Why would you join? Don't join. If you're this annoying on YouTube, I can't imagine how annoying you'd be in a smaller circle. I don't know. What is your question? What is your question, Mr. Entitled Boy? This is question BITF and TGB peace. I don't even know what that means. That's what you want me to answer? Yeah, he's super weird, bro. BITGTGF peace. How about you speak like an adult male, and maybe I'll answer you instead of talking like a baby. What the fuck does that mean? Daz, sorry to burst your bubble. I'm actually up on the day on every single account. And if you stopped watching Pornhub and actually did something sensible with your life, you'd know that. But you're too distracted by your other window. Man, this is why parenting is so important. You guys join a stream because you want to trade with someone and you want the information that someone gives. In the sea of thousands of people asking questions, you get so entitled that your question doesn't get answered. When I'm looking for trades for you, and then you start insulting me. It's amazing. Some of you weren't slapped hard enough. Couldn't even find my question? Bro, you're talking like a fucking toddler. TGI, BTF? What the fuck does that mean? John says, if you have, for example, 10K funded prop account, when should you take profits? 11K, 15K, or just whenever you want? Are you allowed to make more? Every firm will have different payout rules, right? And then different profit splits, etc. And then it's different if you're on a live account versus a PA account. But yeah, I mean, I'm of the mindset that you should be withdrawing profits regularly. Why else are you in this? But I'm also of the mindset that what works for somebody might not work for you. I don't know how good or bad you are at trading. But if you've never received a payout, then yeah, I think your first priority should be getting the first payout, because it also has a psychological effect on your trading. Oh, this is a question that he was dying for me to answer. What about North Korea joining the war? That's what you were so irate about? Not even a trading question? Just some hypothetical Terminator 12 scenario? For someone new in the game, what would you explain? What would I don't know what that means. What would I explain for what? The trade I took earlier on NASDAQ, we just swept liquidity. High time frame objective is there, right? Low time frame swept liquidity. Closed above the fair value gap and came back to retest it. And I bought that. Recognize that we're still in this 15-minute fair value gap. So was aiming for 2 to 1, and I think I got slightly less than 2 to 1. On gold, that trade I was up 600 per contract on was a short. And once we hit 830, I could have taken profits, but I didn't care for 600 per contract. I wanted to see if there was a way we can get a continuation out of this 15-minute fair value gap. Because if we did, the profits to go from here to data lows would have been astronomical. So for me, it wasn't worth it to book the profits. I was willing to go break even, or it would have been about $3,000. So hopefully that helps. Is there any way you can explain as if you're talking to a complete idiot? Unfortunately, no. That's as much as I can explain without giving you a 2-hour masterclass on the basics of TA, what's a fair value gap, etc. Like, I understand that my screen is blurry. What do you mean? It's not blurry. I understand that you want to make money as fast as possible, but if it was easy, why would anyone need a job? Right? Everyone would just sit at their computers and easily make money. It's literally the hardest way to make easy money. So unfortunately, no, there isn't an easy way for me to teach you how to trade in a YouTube comment. Trading is hard. Trading is not easy. I know that there's sort of an incentive to say that trading is easier than it really is, because that way you get sold a lot of things. But in reality, I think, 1 second, guys, sorry. 1 second. 1 second. I'll be right back. All right, sorry. What I was saying is, unfortunately, trading is hard, man. There's no way that I can explain it to you easily, and you somehow digest that enough to now then take trades 5 minutes later, right? There are many free resources to learn. I have a free course here. Let me send it to you. A unicorn is just so if you type in ICT course, the traveling trader, it's this one, but it's an hour and a half. So maybe watch that and it will give you a good sense of what's what. But yeah, unfortunately, I can't teach you how to trade in 5 minutes. Do you think Tesla goes up after Robotaxi? How the hell would I know that? Tactical Capital. If you don't think World War III will affect trading, you're a clown. No, actually, you're a clown. Okay? So between 1942 and 1945, at the height of World War II, the stock market, the S&P 500, went up 150%. At the start of the Iraq invasion of 2003, the stock market went on a 100% run. So respectfully, until you look at the data, shut the fuck up. And yes, as other users have said, go hide in your bunker. So what we're looking to see here, it's 10:43. What we're looking to see, I already took advantage of a move up in NASDAQ from this liquidity sweep, but I want to see what is the extent of the move. I think in the next macro, we could likely see a higher move. I'm hoping that we take out the data highs, which on NQ is at around 20,478.5. On ES, it's 5844. We only really need one of them to do it, but I think that on the next macro, we can get an expansion up to there. And the next macro starts in 6 minutes. Why is war good for the stock market? Because war boosts economy. Because war creates liquidity. Because during times of war, the Fed prints money. During times of war, the government spends more money. Right? So there's a general easing, quantitative easing that happens when war starts. It's just the way that America does war. So anytime that you inject the economy with money printing, the stock market is going to do good. And that's why, you get the people who have no idea what they're talking about. They think, no, it boosts defense, only maybe oil. Dog, I just gave you the S&P 500 facts. Like, how stupid do you have to be to try to run a trading channel? This is Tactical Capital's channel. And not even just do simple research and see that between 1942 and 1945, the S&P 500 went up 145%. Tactical Capital, daily stock alerts, but yet won't even pull up a chart and is in someone else's chat spewing conspiracy theories and calling other people dumb for not believing conspiracy theories. But this guy is providing you stock alerts when he can't just pull up a regular S&P chart that goes back 100 years, and you can easily look up what I'm saying. Apologies. No more time wasted on that idiot. Let him babble in the chat. And hopefully one of you signs up to whatever stock alert service this genius is spewing, who won't even take 5 minutes to look at a chart. But Tactical Capital, you told me to short when World War III started. You said North Korea was joining the war. Yes. Were you actually using a chart? No. I dreamt it last night. And this is what I feel. I also saw that North Korea was joining the war on my Facebook page. Yeah, I think let's see, we're hitting the macro in 3 minutes. Man, gold has really stalled out here. I was hoping gold would take some more buy side here. We are left with equal highs. That was the high of the day so far. Mr. Nice Guy says feeling is a powerful trading indicator. So we took out buy side, pumped in the first macro, consolidated in the second macro. The only thing that's stumping me here is how strong this 15-minute gap is. This here is trading view. Yeah, I still think this likely has more upside here. Should I enter another trade? Oof. The 10-year is going up, boy. Past 4.1 now. I told you yields are going to go crazy if CPI comes in higher than expected. Remember that the RTH gap is above us too. Just Google or YouTube fair value gap, or watch that free course that I sent earlier. I don't have time to go over a trading masterclass right now. You can easily take some time out of your day and learn it if you really want to. The course that I put together on YouTube is free, so took 2 trades so far. NQ and gold. NQ longed from here. Gold, I took a morning short. And I hit break even on gold. Hit about 40 points on NQ, maybe a little more. I'm looking for another trade here. What do you think about TLT? I'm not going to repeat myself for the 10th time. Sorry. Just got here, so rewind it. Oh. Okay. This looks much clearer here. So this gray box is the RTH gap. And the 15-minute gap. Okay. So ES has a 4-hour down here. Uh-huh. Oh, man. Off the 15-minute. I should have just set this for the day and left. Hmm. I'm not gonna look at. I mean, Tesla it has the robotaxi event later today, so there's no way for me to predict that, guys. I don't work for the company, so how would I know what happens? I'm in the dark, just like everyone else. If you want me, from a technical perspective, yeah, I mean, we popped above this trend line on the monthly and are retesting it, but we have a binary event today. In general, this would be, bullish when you pop above a major trend line, come back and retest it. But I have no idea. I can't. I wish I could. I can't predict what happens. I might just set this play. This makes total sense now with the RTH gap. So we're still in the macro. I wonder if NQ can continue this sell model here. This market maker sell model. So we filled the RTH gap. Let's see. This looks really good. Yeah, I think it's going to complete at least this. I'm going to try and short ES down to there. DJI, what is that, a Chinese stock? No, I'm not going to analyze a Chinese stock. Sorry. me see something. $10.50. Took out the RTH. 15-minute down. I'm thinking about this play here. And what I need to see before I take something here. High, low, higher, high, lower, low. So that would be the 15-minute time frame, but I missed that entry from the 15-minute. Let me see something. Pop. Up. 13. Pop. Yeah, I mean, this is right now, this is a scalper's paradise for sure. It's not that it's a great long or a great short. Look at the price action. For the last hour and change, last hour and a half, we've been stuck in this. So yeah, you can celebrate a long or short all you want. It's still ranging here. So if you are a scalper, then yes, by all means, scalp away. If you're trying to find a broad, that's a different story. Two different sports, guys. That's exactly what I was asking him. I was trolling about his short recommendation and putting money on the opposite side. Dude, I didn't take a trade. The fuck? I'm looking for a broad. I'm saying if you scalped, that's awesome. I don't understand what you're celebrating here. If you're celebrating here, that's clearly more telling about you than it is about me. That you're celebrating tiny scalps. Yeah, these scalps are great if you catch short, long, whatever. I'm looking for a broad, dude. You're a sad individual, bro. I'm not in a trade, and I didn't make a recommendation. I'm just scoping things out for broad. I don't know, bro. You decided to watch me. I don't. It's not the other way around. I would never watch you. For real, they're super weirdos, bro. As Kranz, why do you want my attention so bad, bro? Do you have nobody in your life? Go make your mom a sandwich instead of the other way around. I'm sure she's tired of making you sandwiches, bro. Go make your mom a sandwich and rub her crusty ass feet. Hmm. 9, 10, 11. Oh, we have a 10-year bond auction at... Oh, no, that was yesterday. We have a 30-year bond auction at 1. I want to see if we close above this 15-minute fair value gap or not, because we do have SMT divergence on the lower time frame, where NQ made a higher high and ES made a lower high. And we're still in that 15-minute gap. Nah, he can't leave. He needs me. He needs me to validate him because he's such a pathetic lowlife. There's no one else in his life to give him attention. I'm starting to like the setup on crude oil here. No, earlier the trade I took was a gold short before market open and an NQ long. So still up nicely on the day. But being picky here on price. I do think that there might be an oil short here. Yeah, S. Kranz loses a bunch of money, bro. He's always in here trying to take my trades. The amount of money that guy loses is crazy. Have you seen his posts online? One time he was live trading and he had to turn the stream off. He's definitely not new. And he deleted all the videos in his channel. Go to his channel. You see it's blank. So after he failed at that, he's in here trying to troll. S. Kranz. I like a short here on oil. Have we gotten the CPI report? Oh my God. Go back to bed. Let me see something. 4 hour. Bro, S. Kranz had to delete all his videos. That's why his channel's empty. He was also caught paper trading, which is crazy. So rejected off the 4-hour candle. Yeah, the fair value gap. 10-minute, 10-minute. Apex? Yeah, I don't know. It might be only 50% off now. I don't make the rules. 74.82. So what I'm looking at right now is crude oil hitting this 4-hour BPR and looking to try to confirm that on the smaller time frame. That. So pop below, came up above, 5-minute gap right there. There's actually a 10-minute gap right here. Can we get 2 to 1 out of this? Structure retested. Sweep. CPI is already out, dude. Wow, look how weak ES is compared to NQ. That's wild. Four-hour. Hmm. 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 Took 8:30. ES is weak for sure. What I was saying was on the higher time frame, ES looks like a potential short from here. But okay, this is what I'm interested in here in oil. So we rejected off the 4-hour fair value gap here. And on the lower time frame, we are retesting an imbalance. I want to see if this is the rejection here. Yes is S&P 500. You can take a crack at oil here. Stop limit is not too bad. So if you held pop above this consolidated for Now it's going towards data highs. While ES is still stuck. That's interesting. That is very interesting. That we still have S&T divergence with ES and NQ. I wonder if NQ takes data highs, but would be very interesting if ES just stayed down here. I wouldn't short the indices in the short term here. If you're gonna take a multi-day trade, yes, I think you can justify a multi-day trade. I don't think that in the short term, like, you know, if we're talking about like the 5 minute or the 1 minute, this doesn't look like a short. On the higher time frame, it's a different story. It was a bumpy ride up though. Yeah, I took profits on an NQ long. I took profits, quote unquote, early, but right here is where I took profits. You know, it would have actually, if I put my stop limit to break even, it would have came down and took my stop. But I took profits here, and then this is what now 2 hours later, we're now finally getting a push up. But I wouldn't short NQ. S&P looks like a potential multi-day short. Still surprised we pumped and then stuck leading into this CPI. No, that's exactly what happened last time. You tend to get all-time highs before recessionary news. Yeah, but this right here is crazy that ES is just stuck here. I would entertain a multi-day short on ES. Let's see, 12,500. 12 times 5,600. $24. 20 times 50 is 1,000. Yeah, I don't know that I'm going to take any more trades in the AM session, guys. Might wrap it up and take it to the Discord in the PM session. Lunch macro in 2 minutes. All right, I'll stay for that. Do I really want to commit any money here? There's really nothing I want to take here, guys. The only thing that is interesting me here is the fact that ES is still stuck here while NQ is making it up, but I don't know that NQ is done pumping because we have midnight here and we have the data highs here. So very hard for me to initiate even a multi-day short on ES here. Like I like this setup here in isolation. But not with where NQ is at. I feel like the market might be melting up again. Well, yeah, if we're talking about intraday, we always knew the possibility that data highs would get taken out, but that's not the same as a melt up. Also, what happens today is insignificant compared to the news, right? The news, the market is just looking for liquidity, so it quite often trades counter to what the news is. Jeff, that's a good assessment. Richard, nobody forced you to be here, bro. I'm trading to make money, not to entertain you. So if that means I take one trade 2 hours ago, so be it. Do I trade live on YouTube every day? God forbid. Yeah, when NQ finishes its run, either at midnight or data highs, then I'll take a look at ES. But right now it's not, there's no trade on ES. Thirty times 50. Oh, wow. Celsius up 6% yesterday, 15% today. Yeah, I have a position in Celsius, truth be told, I think like in the 50 range. But if there's rumors of a buyout, I think Celsius explodes. It is admittedly a small position for me, but wow, where I sold NQ back at 10 a.m., 2 hours later, it's finally hitting data highs. Like, I wanted it to hit data highs when I was in that long, and then I would have had to wait 2 hours for it to go. This 15-minute finally get filmed. All right, we took data highs on NQ, ES going for it. I don't think the Dow gets to data highs, but ES might. Don't let that chair distract you. What chair? I don't know. What kind of lingo is that? Are you eyeing a long back down? What does that mean? A long back down. That's confusing, bro. That's an oxymoron. All right, guys. I'm going to take this to the Discord for the PM session. If you want to join, click that link at the top of the chat. But I'm going to take this in-house for the PM session. Didn't take a ton of trades today, really. Only took the two trades, the break even on gold and the NQ long. And that's really it. So see if we can catch a PM trade. I wonder if there will be a counter trade in the PM session. Would not be surprised, to be honest, but has to set up for us. So we'll see. What? I don't know what he's talking about. All right, guys. I'll see some of you in the Discord. Peace.